Well, if you listened closely during the first presidential debate last week, you heard Donald Trump talk about the Federal Reserve creating an investment bubble in this country. But what does he mean by that? How does it impact you? Here to explain are Greg and Kristen Taylor, financial advisors from Legacy Retirement Group, joining us again as they do every Monday. So always good to get advice on stuff like this, especially so timely. And we're all kind of wondering when they say these things, what it means for us, right?
Yes, yes.
And so this, he kind of claimed that our economy was in a, quote, big, fat, ugly bubble, is how he put it, right? Very PC, just like Donald Trump is.
Always PC.
With increasing debt. So what are your thoughts on that? What did you guys immediately think when you heard that?
Yeah, so I actually felt pretty good. He validated us, although a lot of people don't like him, so, take that or leave it. But, we've been saying for a while now, whenever the Fed comes on and talks about a rate increase, the markets kind of jitter a little. And honestly, I think they were feeling it out, and that's why all the hoopla every time they have a talk about it. But here's the thing. They have said that more than likely they'll look at it again in December, but don't expect a rate in December. Expect it after the first of the year, which is also when the president will take over the White House. So whose fault is it going to be? Right. So it's smart of Trump, really, if you think about it, to bring that up now and get that on people's minds, so that he doesn't have to take the blame if he gets elected, right? We don't know who will get elected, but that is certainly something that we see happening after the first of the year.
Well, it is, and imagine this, we know that we're in an artificially propped up economy. We had several rounds of quantitative easing where the government stuck money, infused it in the economy, if you would. And we know we have approximately $20 trillion in national debt. And just if the Fed were going to come out and raise the interest rates, that's going to tighten the grip on money, which is going to make it tougher for people to buy houses, make, buying a vehicle, make interest rates higher for that. All those borrowers are going to be paying higher rates, which is going to tighten the grip on the economy. And I think it truly would cause some of the things that we've been enjoying on Wall Street, these all-time highs, to come tumbling down, as well as interest rates rise, cause bond values to drop. So Robin, if that were to happen, I think we truly are in a bubble, and truly people need to be paying attention to their investments. They need to be paying attention to what they're doing in their families and their personal economy to make sure that bubble doesn't burst on them.
And that's the thing. So do you think in 2017 that we're going to see this interest rate hike?
We're going to see a little bit of a hike, but more than likely our economy couldn't sustain a high hike. I mean, we're talking maybe 1%, maybe not even a whole percent.
I would be shocked if it was 1%.
Yeah, so I mean, it's not going to be a crazy hike, but it is going to be a little bit of one, and it's probably going to be enough for the markets to not like.
So what kind of advice do you have for people out there? Are we
so what can we
pay
do, right?
extra attention to our investments? What do we do?
The sky is falling. What do we do, right?
Exactly. We need your advice.
And we're not trying to say that, but there's a few things you can do. First of all, keep a tight grip on your portfolio right now. Know what's happening within your portfolio. Know what you're paying in fees. Know where you're invested. Know what your risk is. If you just know those things and find out maybe I'm in a little more risk than I think I am, maybe you need to scale that back a little so that the hits won't affect you as much. And then, of course, if you met with us, we could share with you some strategies we use to put a floor so that you wouldn't experience a tremendous loss should the markets go tumbling down.
Right.
Another area you can look at taking care of is ensuring your income. Looking at ways to take a portion of your investments into an income plan, which, by the way, a lot of insurance companies, when interest rates go up, their rates get a little bit better. So you can look at putting a portion of your portfolio in there and having those funds not be at risk then.
Okay, so let's talk about the planning review. You're giving it to the first 20 callers, Greg. This is the way you guys really can get to know somebody, get to know their portfolio, right?
You have to get down to the nitty-gritty, I like to call it, where you find out where people live, what their budget is, what their real needs are, what their lifestyle is all about, and then create an investment plan and an income plan. Make sure Uncle Sam isn't, getting too tight a grip on their finances. Healthcare and insurance, just like previous guests talked about, making sure those things are in order, and then making sure we have a solid estate plan, getting all those things in order. We want to make sure that nothing slips through the cracks for folks So the first 20 callers, Krista and I'll be so excited
Yeah.
to sit down with them personally and get to understand what their needs are and try to be a help.
All right, definitely. Thank you guys so much for being here as always.